So in today's quick video, we're going to be talking about two very important concepts when it comes to trading. And this is pips, right? And profit. Now, pips stands for points and percentage, and it's how the market is actually measured. So we were going to use the number 68 and we were talking about the weather. The weather is measured in degrees, so it will be 68 degrees outside. If we want to use that same number and talk about speed where I'm from, that would be 68 miles per hour. Now, when it comes to trading, if we're talking about the distance and how far the market is going to go, whether you're buying or selling, that would be 68 pips. Now, it's important to understand how to calculate your pips so that you can know what you are risking or making when it comes to your trades. So I want to give you guys a few examples, and I'm going to start with lot sizes because this is a fundamental that you have to understand when it comes to trading currencies. So a 0.01 lot size is the smallest lot that you can use when trading. And when it comes to trading currencies, this is equivalent to 10 cents per pip. Now, 0.02 is going to be equivalent to 20 cents per pip. And if we move it up a little bit, 0.08 is going to be equivalent to 80 cents per pip, right? Ooh, we're going to do 80 cents per pip, and so on and so forth. Now, the next level is when we move into the dollars. So 0.10 is going to be equivalent to $1 per pip, right? 0.30 is going to be equivalent to $3 per pip. And if I do 0.90, of course, this is going to be $9 per pip, and so on and so forth. Now, once we get past this, we move into the standards. So 1.00 is a $10 per pip, just like 7.0 would be $70 per pip. And let's just say 9.00 is going to be equivalent to $90 per pip. Now, remember, you don't have to remember these numbers specifically, but you do have to remember the difference between the micro, the minis, and the standard lots when it comes to calculating your profit and your risk within the market. So I'll just leave this here because we're going to use it again in a second. You guys can also screenshot this, or you can simply Google pip calculation chart, and you can save it to your phone so that you'll always have it. So we're going to actually look at a sell example and a buy example of trades that have already played out and moves that have already happened in the market. And you can see how much money could have potentially been made or lost within this trade. Now, these indicators on my chart are from a strategy called the double EMA and MOM strategy. And I do have a longer video on that if you are interested in using this when it comes to your own trading. So for this particular strategy, if we were going to go for a sell, we would want to look for some liquidity or resistance, which we can see right here by the wicks. That's our first confirmation that this is an okay trade to take for a sell. The second confirmation that we have is that the candle is forming below both of the EMAs, confirming that the market is going to continue on a downtrend. And the third confirmation that we have is that the momentum line where we will enter our trade is below zero, and it also has a downward slant, letting us know that this is safe for a sell. So once we have all of these things and it's confirmed, we can see that this trade actually did play out for a sell. And if you click on this ruler tool and click it from our entry down to before where the market started to buy again, you would see that this was about 111 pips that the market dropped within 3 hours and 45 minutes. So why is this important and why does it matter to you? And how does it come back into our discussion with lot sizes? So we can actually see how much money could have been made with 111 pips. So how you want to calculate your profit or your loss within this trade is you would want to multiply your pips by your lot size. So in this case, if we had 111 pips and we use the smallest lot size, we just do that. In this trade, we could have potentially made $11. right? If 111 pips was our profit target, if we had the same amount of pips and we were using a higher lot size, let's say 20 cents, right? From our example, in this case, we could have potentially walked away with $22. Now, if we have 111 pips and we're using a dollar lot size, right? 0.10, then we could have made $111 in this trade. Just like if we used a $2 lot size, and remember that 0.20, that could have been, I love these angel numbers, by the way, that could have been a potential profit of $222. Now let's go to our standards. And if we used 111 pips with 70, right? So we have the same amount of pips, but we have a higher lot size. That could have made us a profit of $7,770. Now, what's important to understand is that our pips never changed. This is the same exact trade with changing your risk amount. So let's just say these were 5 different traders. Trader A walked away with $11. Trader B walked away with $22. Trader C walked away with $111. Trader D walked away with $222. And Trader E walked away with $7,770. So this is why it's important to understand the fundamentals of trading Forex, because if you understand when to enter, then you only have to focus on increasing your capital, because the same trade idea could have brought you these different results, right? So that's extremely important. And I'm just going to delete that. Now, a very simple way that you can actually calculate your pips without having to do a lot of math is to use this tool right here. It's really helpful. Now, the short position tool is for sells, because when you're selling in the foreign exchange market, this is called going short. And the long position tool is for buys, because when you're buying in the market, it's called going long. So what we're going to do, just based on this past example of something that has already happened in the market, we're going to click on the short position tool. And you always want the middle of the boxes, right? Where the boxes meet to be where your entry point is. Now, if you're getting into this trade with market execution and you're not setting a limit order, and I highly recommend you watch my 5 types of Forex order video, you want the middle of the line to be where your entry point is, and you can click on it to change the inputs. So in this example, our entry was at 1.08271. And I find that a safe place for beginners is to try to secure 20 pips in your trade, right? So if it's 20 pips, you're going to put 200 because you have to multiply it by 10. And the easy way to remember is just put 20 at a 0. And the same thing for your stop loss for a 1-to-1 risk to reward ratio. And then you're going to notice that the box has changed. And these are the numbers that you're actually going to plug into MetaTrader 4 or whichever platform that you're using to trade. Your profit level would be here. It gives you the exact number to plug in. And your stop loss will be here. It gives you the exact number to plug in. So here we go. And as we can see from this example, using our short position tool, the stop loss was not hit, which means we were not taken out of this trade losing money. And the profit target was hit because it was within our green zone. Now, again, if you drag your green box down, you can see that this entire zone was profit, and that is how the trade played out, which is amazing. So I'm just going to give you guys a buy example really quickly, and then that's going to be all for today. So again, using the same strategy, if we were to enter the market in this area for a buy, if we were to enter the market in this area for a buy, we have all the confirmations. We have our liquidity, right, or support zone. Let me draw that a little better. We have our liquidity or support zone because the market had a harder time getting lower than this point. We have our candle forming above both of our trend lines, letting us know that price was going to continue to go up. And our third confirmation we have is that our MOM is above 0. And again, if you want more details on this strategy, you can watch my double EMA and MOM strategy video, which is here on YouTube. Now, in this trade, we can see that from our entry point, which would have been around here, all the way up until when this trade actually decided to reverse, that was about 104 pips. It was a 104 pip move that the market actually made. So let's calculate how much potential profit we could have made in this trade using our different lot sizes. So let's just say we use a 30-cent lot size, right? We could have made $31.20 in this trade. If in this trade we were going to use a, let's just say a $8 lot size, right? Which would be 80. That could have been a potential profit of $832, which is not bad, right? For hard days of work. And if we were going to be in the same exact trade, but we were going to use, let's just say $30 per pip, then in this same exact trade idea, someone could have made 3,000, and someone in the world did make $3,120. So although this was the same trade idea, this was the same analysis, the profit was different based on the lot sizes that trader A, trader B, and trader C used. So that's why it's extremely important to focus on getting your capital and not focus on getting a whole bunch of pips. And again, if we're going to be looking for a buy, instead of using the short position tool for a sell, you would use the long position tool for a buy. You will want the middle of the two boxes to be where your entry point is, and then you can click on it, and you want to modify your take profit and your stop loss levels. So again, a safe place for a trader is start out with 20 pips to make sure that you're securing your pips. But if you wanted to get 50 pips in this trade, right, and you wanted to also set your stop loss at 50 for a good 1-to-1 risk to reward ratio, it would tell you which number you should plug in for your TP and which number you should plug in for your stop loss. So this is a really helpful tool to let you know when your trade is in the danger zone, which is the red, and when your trade is in the profit zone, which is the green. So I really hope that this was helpful in helping you guys to understand how to understand lot sizes and how to calculate your profits and your potential profits and your potential losses when it comes to trades. Now, again, if you want more information, I do encourage you to do more research, or you can watch my intro to pips, take profit, and stop loss video, which is more detailed. So I hope this was helpful. If it was, please give it a thumbs up. Share this video with someone who you think could use this information, and subscribe so you never miss when I drop another video. Well, that's all for today. Until next time, rich friends.